Everybody, it's Mark Yagi. Welcome back to the weekly market update. Hope you're doing well. Hope you're doing better than this market. This is a crazy market. Hey, listen, I told you last week to tune out if you don't like bad news. Same thing. Same thing this week. Bad news bears all around the story. I'll show you a couple charts. I'm not going to dwell on it. Just know that last week was bad. This week is worse. Does it continue? It looks like it might. So let's go through a couple of charts and you'll see what I'm talking about over here. All right, let's go over here and I'm going to do some live charts for you. Let's start with the NASDAQ. And you'll see that the NASDAQ is, they're like saying, oh, the NASDAQ is the worst index out there. It isn't. There's other indexes that are worse right now. But the NASDAQ, you can see, is in a severe downtrend. It's like a triple wave going on. And it's now below its 200-day moving average. And it's probably testing it. And so hopefully we get a bounce from here. Stocks like Apple and NVIDIA and other stocks are down. Amazon is up. So that's probably what's saving the NASDAQ today. But anyway, we're below the 200-day moving average, and that's not good. Now, every once in a while, you got to test the 200-day moving average just to see if it's real. And so I suspect that's what's going on the NASDAQ. But when you get one index, usually the other indexes move together with it, or is it indices? I don't know. And so the other indexes and indices move with it. And if NASDAQ's the only one that's trying to be strong, and the other ones are kind of going down, the other ones may bring the NASDAQ down. So, I know this is a lot of back and forth and who knows, and I'm not Nostradamus, I don't know. I just try to read the charts. But to me, the NASDAQ looks like the strongest one. Looking at the next one is the S&P 500. This is much worse, right? This is 5 days below the 200. Everything's diving down toward the 200. You're seeing a breach of that 42.16 swing point. I'm going to give you one. I can do it here. Let me share with you this one little pattern. I call it the dreaded H pattern. You can see a dreaded H right there. See that little H? Well, we dropped below that swing point of 42.16, and we did it on volume, and we accelerated the volume yesterday. And so now we're in this little area, and it wants to go down to this 40.28 area and test it. And that's, it's not that far down, but it's not real close. So that's where it kind of wants to go. That's not good, is it? I don't like that. Nobody likes that. Ain't nobody got time for that. All right. So then we got that one. We got the Dow Jones Industrial Average. This is even worse. Look at how much time it has spent below the 200-day moving average, right? Look at how many days in a row it's gone down. See the dreaded H there down to the 32,846 level? It's breached that, and it's done it on volume. That's not good. And this swing point is 31,429, which is 1,100 points down from here, right? That's not insignificant. That's an 1,100 point drop. And I suspect that we're going there to 31,429 to see what's going on, to test it. Not good. I'll keep going. I told you, if you don't like bad news, don't tune into this thing, because right now we got bad news. Look at this. This is the worst one of all. This is the New York Stock Exchange Composite. It tried to bounce up and hit that 200-day moving average, and it got rejected. So that was a negative test. And now it's way down the other side. You can see the dreaded H, blah, 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 the same pattern there. But now this is below it, and this one's just breached the 14,471. Oh, no, it's going for that. Okay, so it's close to that. It's a couple hundred points away from that. That's not the worst thing in the world, but I suspect it wants to go there. Let's hope it stays there, because otherwise it's going to go to this 13,278 that's earlier in the chart, and nobody wants to see that. All right, let me just give you the VIX. And so here's the VIX, and you can see the VIX is going up, which makes sense. The VIX is the panic index. And so the more panic that there is in the market, the more money comes out of the market. Supply and demand says when the money comes out of the market, stocks go down. And that's what's going on. And that's a lot of volatility. And I'm feeling it in my portfolio, and you're probably feeling it in yours. A lot of volatility going on. The transportation index, I'll show you that, and then I'll finish up here with a couple of other stocks. But look at this. This is transportation was bad, and now it's worse. Look at how steep the drop is on the transportation index. Listen, if people aren't moving goods around the country, around the world, the stocks that sell are not doing that either. And so we're seeing that the Dow Jones Transport kind of precedes what's going to happen in the Dow Jones Industrial Average. It's called the Dow theory. And so when you start to see moves like this, we're seeing it in the markets, right? We're seeing blood on the streets. We're seeing lots of red. listen, the good news is that it all ends someday and things go up back up the other side. But I'll take a look at a couple of stocks that I know we're in our cash flow machine. And we got a gap down on earnings last week on Tesla from the 242 level, and now we're down below the 200-day moving average. To me, it had to test the 200-day moving average. It's probably going to, hopefully it doesn't stay here too much longer, but we need a bounce above the 200-day moving average fairly quickly. The good news is we're kind of testing below the 200-day moving average on fairly light volume. So that's good news for Tesla. But, Tesla's got some headwinds right now these days. And with the market being down, that doesn't help it either. Apple is the last one I'll say. And Apple's doing the same thing. Apple's got numbers next Thursday, earnings report. It gapped down off of earnings a couple of months ago, and it never really got back up and recovered. And now you can see it below the 50 and below the 200. I suspect, like I said with Tesla, that we're going to probably test the 200, but we were down on significant volume yesterday through the 200. It's trying to come up today, but it ain't happening. And if it doesn't get back up above that 200 moving average before earnings, I suspect you got to be really careful going into numbers next Thursday. So that's it. I know I don't have a lot of yummy stuff for you. I'm just telling you that there's a time to push on the accelerator and there's a time to start putting on your foot on the brake. And this might be that braking time right now, because the market is telling us that there's some trouble. And it's because the Fed isn't lowering rates. And it's because of we got wars breaking out all over the place. So whatever the reasons are, there's more people selling than people are buying. But you know what? There's other stuff to worry about in the world than your portfolio. It's a good thing to worry about, but you don't have to think about it all the time. Go out and have yourself a great weekend. I'll see you next week here on the Weekly Market Update, hopefully with some better news. Take care. Bye.